this is John Cavalli, and this is our summer newsletter, kind of a fall newsletter, and it is dominated with tax laws. So I'm going to go right down to this entire newsletter, and we'll do our usual intro and cover, and hopefully you guys enjoy the summary. So those of you that are in listen-only mode, if you're driving down the road, keep your hands on the wheel. We always say that, be safe. We do this in a video, audio podcast, and basically just opening up my head and telling you what we were thinking about. In this case, we were more thinking about discrepancies and being actually as accurate as possible. So let's jump into this. Those of you that are in listen-only mode, I am scrolling up from the header picture to the pseudo lookout. And it's not lookout. It is just literally at the printing of this newsletter. We are still seeing things in main publications that we have found that are incorrect. So don't run out when you receive this and make any dramatic changes, which we wouldn't do. I liken this. I had a great conversation just recently with a fellow professional, actually a tax professional, and we liken this bill to the front office, or maybe the person that you bought the car from, and now the car has to go back to the maintenance department, and the maintenance department is truly the IRS to figure out how we enforce all of this, or not enforce, but how we effectuate it. All right, let's get going. There's a lot more in this bill. This bill was passed on July 4th, 2025. There's a lot more in this bill than what I'm going to touch. I know that. A lot of the information starts next year, but I've got to bite-size this and effectuate the things that are going to most affect people this year. Okay, so here we go. I am scrolling up, and this is a newsletter PDF that those of you can download from this. You're also going to be receiving this in the mail. Clients will receive this in the mail. Okay, we did something really, I think it's kind of clever. It was really hard to print the newsletter, and we ended up doing different sizes, shrinking the newsletter a little bit. In the middle of the newsletter is going to be an extra laminated tax. We call it our tax summary cheat sheet. That's going to kind of fall out like an insert of a newspaper. Those of you that have never had newspapers, okay, I know there's a whole generation, but those of you that had, this thing will fall out and it'll be the front and the back. I literally carry it around. I have it laminated, and I carry it in my briefcase, in my backpack. No briefcase. But anyway, there is a link to that here, and that goes to our website, our blog site, and we can all download that, but it's included in our nice handy dandy newsletter. Okay, I keep hitting that. Sorry for you, those of you guys that are watching this. State and local taxes, what we need to know. It's phased out between 500K and 600K AGI. If you're in those zones, and if there's any flexibility, it can actually be more disadvantageous to us to earn 600,000 than 500,000, because losing the 40K state and local tax deduction if we are so inclined. So just anybody that's in that zone that may, if we're 7, that's fine. If we're 4, that's fine. But it's the 5 to 6 zone that really is a penalty. I've exacerbated this with a nice graph from one of our resources. Okay, second big thing. I actually put in there, I'm surprised that more people are not talking about this. This is the age 65 plus extra deduction. It was originally titled the Social Security deduction. It's not really a Social Security deduction. It's an extra, basically standard deduction, $6,000 each, as long as we aren't phased out at 75 single and 150 joint. That phase out is a little bit slower, but if we have situations where maybe extra RMDs and things of that nature, we want to keep an eye on that. That'll give us an extra $6,000 or $12,000 of our standard deduction, which means less taxes. And I say I'm surprised right here. More people are not. They're not talking about this. Okay, we got 2 more things here. The 529. Whew, there's a lot of information on that. I want to say that the K through 12 deduction will be 20K in 2026. We know that. There's a plethora of more uses that we can have for the 529 this year, more as in just a wider, more liberal interpretation of what those are used for. There's also some things that we're getting more acquainted with in special needs. And this is a specific area where we've seen a lot of misinterpretation. Nobody does this incorrectly, but there are some misinterpretations. Lastly, before I get to the key dates, there's a new 1K newborn TRUP account. What that means is if a child is born this year, starting this year, they can get a $1,000 investment account from the government. Doesn't cost you anything, no taxes. What we don't know is where do you get it? How do you get it? Where does it go? Do we open up an investment account, or is it something held with the government? So that's kind of the front operator versus the maintenance crew. Some key dates here. This first one I put in red, so everybody that gets in an email is going to see it. The EV credits expire on September 30th. You got to have your vehicle purchased by then to get that. Better be purchased. There is a new 0.5% floor on charitable contributions that goes into effect. Think of it as just like a floor. 0.5% of our income is phased out for the charitable contribution. And then I also mentioned here that the K through 12 goes up to 20 and the 529. Going to be a lot, and even the 529 companies are going to have a lot of trouble doing this, understanding it. The tax profession is waiting on a lot of these laws to be, how do we do them? It sounds good. We engineer the car, but now how do we work on it? And so a lot of these will be ferreted out by the IRS. This is our first run through it. Believe us, there's a ton more on this, and we would rather measure twice and cut once. And so we've not given you everything, but we feel like this is a great start. And there'll be another. We'll have another winter newsletter that will have more information on this and likely more planning topics. Okay, that's it. Thanks so much. Have an awesome day.